Hi everyone, this is Mike Kramer from Mott Capital with a preview of the ECB meeting on Thursday. Today is Tuesday morning in New York. So right now, markets are implying about a 70% chance for a 50 basis point rate hike. Market-based expectations have sort of shifted since the Silicon Valley Bank episode. You can see that the terminal rate has come down from a peak of about 3.8% to around 3.3% over the past week. So this is why you're seeing a little bit of hesitation in terms of what the market thinks the ECB is likely to do. Expectations had been for a 50 basis point increase, but that has come down as a result of this Silicon Bank Valley episode. And that's been partially reflected in how the German 2-year rate has responded to the events as well, coming down really sharply from, call it 3.35% to a low of 2.4%. But what is clear, though, is that this 2.4% is the key level of support right now, defining, rates probably staying elevated and rates really breaking down and moving lower to the 2% level. Here you can see that there's clear support here, and you can also see that the 2-year did fall below an uptrend. Currently, we're trading back up above that uptrend, and that's really the key here is holding this uptrend, and then of course holding this low. Once this low breaks, there's probably not much to keep it from moving lower. And again, where the 2-year in Germany goes is largely going to be dependent upon the forward guidance the ECB gives, how they see that this Silicon Bank may have impacted what they're thinking about. So from that standpoint, the guidance that the ECB gives, it might be more critical than what the actual rate hike is. When we look at the German 10-year, that also is at a major level of support. That's been basically sitting on the uptrend. You can see that this low from yesterday held today. This would be the next major level, around 2% for the German 10. It is worth noting that the RSI is trending lower, which would suggest there's a bearish divergence. And that the 10-year is losing a little momentum here. So it's really going to all depend on whether or not the ECB remains a hawkish stance following the events in Silicon Valley. My guess would be that they're going to continue to be hawkish, and they're going to lean with hawkish commentary at the press conference and on forward guidance. This is, obviously with all the movements, this has resulted in the euro rallying some against the dollar. But to this point, the euro really hasn't been able to clear this 107.40 level. This is really the big level of support, the resistance for the euro around 107.40. You can see that this level was key here, and it's been holding again here. And so, again, this is the key level, and if we break above this 107.40-ish area, there's room to run to 109. If you stay below this 107.40 area, there's room to fall back down to 105.25. And the movements in the U.S., bond market and the German bond market have also spilled over to the British bond market. You can see rates in Great Britain have fallen somewhat, but again, they're still holding in to some of these levels that we've seen in the past. And we've also seen, obviously, equity markets in Germany get hit, falling very sharply on Monday, and you can see they're rebounding. Again, here's the big level of support at 14,900 on the German DAX. Very clearly, momentum has shifted from bullish to bearish with this bearish divergence pattern. You could see the uptrend in the RSI has broken, suggesting that momentum has turned negative for the DAX. And more importantly, a break of 14,900 could easily result in the DAX going back to 14,000. And while that may not sound reasonable, it is worth noting that the DAX is very highly correlated to the China reopening trade, and Australia has been very highly correlated to the the China reopening trade. And you can see Australia has really fallen sharply in the last couple of days and weeks. So it's worth being aware of this, because if we continue to see Australia struggle and this China reopening trade struggle, and then you get a more hawkish ECB, there's a chance for a big reversion here in the DAX coming up if this relationship continues to hold still. Also, you've seen the UK FTSE give back some recent gains as well. The UK FTSE also has a little bit of a relationship with Australia, and you can see that as well. Also, the FTSE, obviously a very financially heavy index. So again, this is what you've seen in the sell-offs here. It looks like the FTSE is getting a little bit oversold, so perhaps there's some room for it to rebound back to around 7,700 or so. But again, a lot of this is going to depend on how hawkish the ECB is and what kind of message they deliver on Thursday morning here in the U.S. time, obviously in the afternoon if you're in Europe. Anyway, have a great rest of your week, and thanks for watching. Bye.